Welcome back to Economic Outlook. In my previous entry, I began my look at gold as a hedge against problems with fiat currencies. Today I want to conclude this examination with a look at the problem of inflation, as well as an examination of some of the counter-arguments which say that gold may be nearing the end of its bull market run. The wave of sovereign risk from Greece to Spain to the rest of the European Union and even to the United States has put a unique pressure on fiat currencies around the world. This has also buoyed the strength of gold because investors are extremely afraid of inflation. Inflation is closely tied to public faith in fiat currencies. When governments have to print more and more money, they must offer higher interest rates to encourage people to buy bonds and other debt denominated in that currency. A recent example of this happened in Greece, where the country had to offer extremely high interest rates to attract the public to buy its bond offerings. The risk of inflation, and in fact the risk of hyperinflation, pushes more investors toward gold. Inflation erodes the value of wealth and destroys fixed income investments. Gold is seen as a way to offset these risks to wealth accumulation and fixed income products. Given everything that I've discussed in my previous entry and this one, it's easy to see why gold has become a popular investment vehicle to offset some of the problems with fiat currencies. However, some people believe that the market for gold has become overheated and that the bull run may be nearing its end. So now I want to examine the possibility that gold prices have plateaued and that there may be a retracement. Gold's rise has been impressive and it follows sound economic principles. However, some people question whether the rapid rise in prices has reached an unsustainable level. And I think this is a fair question to ask given the number of asset bubbles we've seen over the past 10 years. Few question whether gold is an effective hedge against the problems that I've described previously. And gold ownership and gold being a part of investors' portfolios has reached near record levels. Physical ownership remains popular, as do ETFs, which offer investors exposure to gold or gold miners. As an aside, people who own gold ETFs need to make sure that they understand the rules that the ETFs follow. For example, most of the major ETFs, including GLD, don't make their gold transaction logs available to the public, so it's difficult to know whether or not they're actually following their own rules when it comes to purchasing gold to backstop the ETF. Physical ownership of gold is still preferable for those who want the most security in actually having possession of their gold. However, physically owning gold comes with its own problems. You have to have a place to store it, you have to make sure it's secure, and it's much more expensive to do all this than it is to own an ETF. So ultimately, I would encourage anyone who wants to invest in gold to really understand the risks of physical ownership, the risks of ETF ownership, and understand all of the costs involved before you make an investment decision. The explosion of gold ownership and the popularity of ETFs have caused some observers to question the rise in gold prices. Could demand be overheating, people ask. Gold has become such a popular commodity that major suppliers of physical gold have engaged in saturation advertising campaigns. So you can see G. Gordon Liddy and Dan Florek, the guy from Law & Order SVU. You can see them pitch gold pretty much anytime you turn on a major cable news outlet. You'll see commercials for these gold brokers. And in every major city, gold brokers have replaced pawn shops as the major buyers of secondhand gold. These places have sprung up, they purchase gold, process it, and then resell it at higher prices. Increased ownership and attention to a commodity rightly cause people to ask questions about whether or not prices have reached unsustainable levels. And I think it's fair to ask this about gold right now. However, answering the question of whether or not prices are unsustainable is much more difficult. The world is facing sort of an unprecedented series of economic crises all at once. You have general economic malaise, coupled with record deficit spending, problems with fiat currencies in every major country, shaken faith in reserve currencies, and in fact the whole fiat currency system. So you have an unprecedented set of circumstances to coincide with record high prices, and it's really impossible to untangle the two. You don't know if prices are being driven purely by speculation, purely by fundamentals, or a mixture of both. Ultimately, the price of gold is closely tied to economic recovery and the stability of major currencies. If you feel that economic recovery will happen soon and that currencies will maintain their stability and order, then you probably also suspect that gold prices are unsustainable. But if you are more concerned about the time frame of recovery and the long-term stability of the US dollar and euro, then you probably believe gold prices can continue to rise. I'm actually really hesitant to offer my own opinion on gold prices because, like I said, the situation is so unprecedented. There's definitely a fundamental case to be made for increased ownership and interest in gold. However, my instinct tells me that whenever I see the sort of commercialization of a product, when I see the guy from Law & Order selling gold, I become a little bit skeptical. In my opinion, I believe that gold is still a valuable tool for investors. Depending on your level of concern with economic recovery and stability of the United States financial situation, gold is probably more or less attractive as a part of your portfolio. I think the most probable medium-term scenario is that we'll continue to see economic stagnation along with continued fiscal irresponsibility on the part of the United States government. So this means the fundamentals for further gold price increases are present. However, I'm also concerned about the popularity of gold and the level of fear in the marketplace. If the economy unexpectedly begins to recover, then prices could turn down. So I think my best advice on gold would be use it as part of your portfolio, one of your potential strategies. And it could even be an important potential strategy. But like anything else, gold isn't a panacea. It's not a cure-all for every part of your portfolio. There's a good chance that we'll see continued equity retracement over the short term, but gold and equities aren't necessarily directly in an inverse relationship price-wise. So you could see a decline in equities and a flattening of gold prices. So keep a very close watch on public sentiment and use gold as a tool. If you believe that recovery is a long way away, then you should probably be more active in gold. But if you're more bullish on recovery, then you should be less active. I'm not going to pass judgment on which scenario I think is more likely. I think if you've watched my videos and you've seen my opinions on the financial crisis, my opinions on profligate spending, you know where personally I stand on the issue. But I can absolutely respect the opinion of others that say that recovery is coming more quickly. So use gold relative to your level of, I guess, concern about the market, your level of fear. But I would be hesitant to enter gold purely for speculative reasons. If you think the economy is going to recover, I don't see a good case to enter gold to try to sort of jump on the bandwagon of price increases at this point. But if you feel that things could continue to get worse, then by all means, you need to consider gold because it is still probably the best tool to mitigate the risks I've described in this video. So, like most investments, do your homework, understand what you're buying, and understand why you're taking a position. Know why you want to buy gold because of your concerns. Don't just trend follow or something like that. So I hope this entry has helped you understand the popularity of gold, and I hope it's clarified some of the issues surrounding the product. As always, check out my website at www.econoutlook.com. Thanks as always, and I'll see you here next week for a new entry.